And what can be done with the market for the insurance companies to increase their investments into the corporate bonds? Good afternoon, dear colleagues. As for the dynamics of the domestic government bonds, I would like to drive your attention that the demand has really increased in the segment of the insurance companies. So as for the corporate bonds, we shouldn't expect for that, of course, but we can see that it's finally reviving. We have certain key issues which interfere into this growth. Well, of course, in fact, the limited supply, because this year there were two banking issues and two corporate issues where the insurance companies could use. So the interest so far should be revived from the emitter's side. The second issue is the liquidity, because the investment into the corporate bonds is undoubtedly a portfolio investment only. With this tool, well, we cannot do anything. We cannot use it in repo transactions or the governance of the current liquidity to sell it. So the secondary market just does not exist for this tool, or the spreads are sometimes enormous, just ridiculous. And the third point is pricing. When we see the primary placement, so-called pitching, when the client is ready to pay the rate approximately equal to the domestic government bond. So all of the placements of the banking sector were at the level lower than domestic government bonds. In this case, it was not an advantage during the investment into the securities. Then, of course, if we mention about different aspects, we have for us, the insurers, the corporate bonds, which are just the replacement of deposits. But again, we do not see any interest from the banking sector to issue bonds. So here, maybe, it would be interesting for us if we saw the level of domestic government bonds. But here we can see that the sentiment is changing in the market, and lots of companies of the banking sector are ready to pay those rates, which are approximately equal to domestic government bonds. What then can be interesting for the insurers? And we know that the banks claim accreditation deposits, and if partly those deposits could be transformed into the bonds, which would be a win-win situation for the bank and for the insurance company, we would see the increase of the sums of money in this segment and the growth of this direction. Because if you paid attention at the presentation of Alexander, the investment of the insurance companies into the corporate markets is stagnating. This is the overall picture. But if I can add, if you paid attention to the assets of the insurance companies which are increasing, I would say about the regulator that the new provision introduces the norm of the capital requirement, and maybe the new money coming to this market. Theoretically, hypothetically, the insurance company can invest up to 30% of their reserves into the corporate debt and 10% into one enterprise separately. So the amount of the ticket is comprehensible, right? It is comparable to domestic government bonds. I've got more questions.